Given the hype that surrounds BHP's potential expansion in South Australia, the decision to shelve these plans for the time being was clearly, in the words of the Premier, disappointing. However, given the high level of global uncertainty, the impact of high development costs and the diminishing commodity prices, we believe it is a prudent, if difficult, business decision by Australia's biggest miner to delay the expansion. But let's get this into perspective. We still have a well-established, world-class mining sector in South Australia, with more than 20 operational mines, with a further 30 in advanced planning and some 90 in the exploration phase. We are still in the mining business. The opportunity for South Australia has only been delayed and repositioned as BHP Billiton has continued to acquire significant mining tenements around the Olympic Dam site in the past 12 months. So all the indications remain that with extraordinary copper, gold and uranium resources still in the ground, the expansion of this project remains a matter of when, not if, it goes ahead. So where does that leave us? Realistically, in pretty good shape. It is easy for South Australians to take a negative slant on the announcement, but the resource sector makes up just 4% of the state's economy. There is more to this state than mining. Let's not forget, we enjoy a diverse economy supported by industries including defence, agriculture, aquaculture, food and wine, tourism, automotive components, medical research, renewable energy, water management and advanced manufacturing, to name a few. Sure, mining might be the headline act in the media at the moment, but the reality is that this rich diversity of industries, which is our underlying strength and which is not to be ignored by investors and sovereign funds from around the world. So when are investors looking at Adelaide, what do they see? From a property perspective, Adelaide has one of Australia's lowest premium and A-grade CBD office vacancies, sitting between 2.4% and 3.3% respectively, which represents less than 16,000 square metres of office space. The tightening commercial markets is becoming problematic, with a significantly limited number of contiguous floors over 2,000 square metres. So there is an opportunity. This, coupled with the steady rental growth over the past 12 months, 5.9%, demonstrates a potentially very attractive investment return for commercial property owners. Add to that, the news of Adelaide's investment market is considered an investment safe haven according to recent research from Europe. It may be a surprise to some, but I have to say not to me. Adelaide has been identified as a stable and attractive place to invest when compared to other cities in Australia, Southeast Asia, China, India and parts of Europe. This assessment was based on the rental volatility over a 10-year period compared to the prime CBD yields, which clearly paints a very attractive investment picture. Throw in the benefits of having a business-based and staff living in the world's 5th most livable city, and Adelaide, Australia should become an increasingly attractive investment destination. They're just some of the reasons why European funds have acquired sound investment properties in Adelaide, such as 77 Grenfell Street and the Riverside building on North Terrace. Let's not forget that this was all happening well ahead of any Olympic Dam expansion. Adelaide is one of the cheapest capital cities in Australia to live and to do business. Centrally located between the eastern seaboard and Western Australia, with a diverse and rich economy that certainly includes mining, but it's not limited to. The story has not changed.